Good morning, all, and thank you for joining this webinar. So, in this webinar, we'll be discussing about the common errors that people generally tend to do while they purchase the insurance, as well as while they are having the insurance. So, before that, uh, many of you will have many insurance policies like life insurance, health insurance. Some might even have other insurance like home insurance, personal accident insurance, like all of that. If at all you feel that you wanted to get your insurance reviewed, that is a portfolio of insurance that you have, want to get it reviewed, you can share the details with us. Uh, you know, uh, in the number that we provide in the chat or in the mail ID that we also provide in the chat, and we'll be able to assess and tell you are in the right track, or is there something that you want to add so that you are covered in a comprehensive way. So that's one thing I want to tell. uh, by end of the webinar also, you can ask me questions, and we'll be able to we are hoping to answer that in the best way. So I hope we can get it started. So insurance common errors and resolutions. So this webinar, as I told you about, it will be about the common errors that we generally do and what can be the ideal solutions, to put it on the right track, right? So, you know, so this is the first error, that we generally do. Before getting started with this question, right? We have a poll. I would like all of you to answer that poll so that we can understand where we are all literally standing, and based on that, I'll be able to provide a solution. I hope you're able to see the poll. So I request everybody to you know answer this so that we'll get an idea of literally where we are standing. Okay, I think we have a fair responses. So I'll just wait, wait. So most of us, which is like 42% of the from the people join, it's only employer provided, which is provided by office, and 33% of the people, which is one third of the people, they have both employer as well as personal coverage. That's good. And then 17% of the people, they don't have any insurance as of now, which is a high time they have to do some action, take an insurance, if not at least provided by the employer. And only 8% have taken it, you know, uh, where it's only 8% where they only have personal coverage, which is again also good. But 42% is the uh, result where it's only employer provided. So the problem is that it only lasts till we are employed with that company. That's the impact. Second impact is that say if you have a coverage of 3 lakhs which is provided by your employer, which covers your entire family, say you, your spouse, and then your children and parents also, then it's only 3 lakh. And in case of any sudden emergency where more than one people get to hospitalized or really need a treatment, then it really goes for a big problem, because 3 lakh might not be enough. 3 lakh or 5 lakh might not be enough, and you end up getting a loan, right? So that's the second impact. Third impact is that, say you retire only at the age of 55 or 60, until then you only want to carry your employer coverage. The problem is that, as we all age, grow old, we tend to attract more illness, and we are prone to more illness. So when you come out of your employment at the age of 55 or 60, you might have attracted some illnesses, and getting a coverage outside, at the age of 55 or 60 will be a biggest challenge. And you will have many you have many restrictions, limitations. You might have co-payment also. Co-payment is nothing but where a portion of the claim will be shared by you, and then the rest of that will be shared by the insurance company. It can be 20% or 30%, or even more. And then fourth is that, say you're only retiring after you become a senior citizen, or even otherwise you continue to work. Again, you only end up with a senior citizen policy, which again has many restrictions, which again does not cover everything. So all of these challenges are there. So these are the impacts when you depend only on your employer coverage. So what can be the ideal solution? So having a personal life and health insurance for the entire family, irrespective of the employer coverage, that we have lifelong renewal. For example, let's say, you apart from whatever your employer provides, let's say you take a 5 lakh coverage to start with, and then, as every 3 years or 5 years you increase your coverage, right? That will have a lifelong renewability, and you can really dependent on that policy. So that can be the ideal solution. This applies both for life and health insurance, but mainly for health insurance, because health insurance is required for lifelong, lifetime. So that's the problem we're trying to address here. Next is a second error: life insurance with maturity benefits. Right? Again, to answer this question, we have a poll, and I would like to like all of you to answer, and I would like to draw a conclusion from that answer you provide. Mr. Sudhir Kumar, uh, I hope you're able to see the poll. Anyway, the answer is taken. I will try to address that, but if you're able to see the poll, then you can answer there as well. And I would request all of you to answer, because you know this webinar will be really useful in that sense, if you can literally be honest and tell like where you stand in terms of the poll. So I request all of your answers. Okay, okay, from the answers that I've got, quite interesting answers. So first is, 71% of the people prefers only term insurance with no benefit. Really happy to see that answer, because that's what we've been telling people, and I seriously admire your answers. Thanks for that. And 21% of the people have preferred combination of both, which is also not wrong. But then my advice or suggestion would be that, take a term insurance first, and then to diversify or to explore other opportunities that you would want to do, yeah, you can go for savings options, or endowment policies, or ULIP as well, as long as you know what is the benefit in that those policies as well. Because the problem is that most people do not know what is the benefit in ULIP or endowment plan. They just end up taking it because of the tax purpose. but those policies also have you know benef- they are beneficial as well. And but the real beneficial policy is the term insurance policy, because that only can be a pure life insurance policy. So thanks for your answers. And I think the answer is already told. Again, that's the resolution. Having term insurance in place that will act as a solid backup for your financial dependence. So most of you have answered this, and that is the answer as well. Yeah. So the impact can be, if you don't have a proper term insurance in place, the impact can be you will not be adequately covered. Say, your term insurance requirement might be 3 crore, but you only take up a maturity benefit policy, which is only 30 lakhs or 40 lakhs or 20 lakhs. So see the gap. No, it's 90% is the gap. 90% is the gap, because that is your family's requirement after your stage. Next is error three, not covering up to the human life value. Again, so I tell you what a human life value is. Most of you will know, but then just for the rest of the audience, I'll tell you. Human life value is something that will take into account your income, your expense, your retirement age of your beneficiary, that is your nominee, till what age they will live, and then your assets and then your liabilities. So considering all of this, say for example, a person who's earning 10 lakhs per annum, and who is going to retire at the age of 55 or 60, might require a term insurance of 2 crore. This is an approximate value, but then when you literally calculate the human value, it can stand somewhere between 1.5 to 2.5. So, but assume you're only taking for 20 lakhs or 30 lakhs. So that is a gap, or that is a risk you're putting your family through. So the importance of human life value is that your family needs will be fulfilled, because after you, that is the amount that is going to come to your family, and that will take care of all the goals that your family requires. For example, child's education, sustaining the family for rest of the life, or any other important task, or building up the home where it is left half. So all that goals will be definitely fulfilled if you cover your take a policy up to your human life value, and that is the resolution as well. So taking the term insurance matching your human life value is the ideal option. Say if your human life value comes to 3 crore, you can take a policy, not literally 3 crores, you can take up to 3 crores, but then you can at least try to take something 70% of the value, which is 2 crore to 2.5 crore. So somewhere at least try to match that. And as and when you age, or your status or your salary increases, or your business income increases, and your responsibility towards the family increases, or as and when there is a new goal that's been added to your your portfolio of goals, you can consider seeing checking this human life value every 3 to 5 years to see where you stand. So that is also one ideal option that we tell you. Next is error 4, not covering for sufficient number of years. So again, this is not a very big problem, but then this even small errors can leave a big impact, right? So say you want to retire, you are not very clear about your retirement years, then this can be a problem. So if you're not very clear, or if you don't know what is your retirement year going to be, then you can set your retirement as an average industry standards like 60 or 55. And always say you're deciding your retirement year. Say if you want to retire at 55, that's what you're setting your standard as. Then you can again keep a cushion of 5 years. So if you want to retire at 55, you can probably take a policy till 60, right? And whenever you feel that you are adequately covered, or you don't need the term insurance anymore because you have you have settled your family, your all your goals have been taken care of. If you feel that way, then you can drop your term insurance cover whenever you feel you don't need it, by not renewing the policy or not paying the premium. But then the problem is that some of us, we might be little ambitious, and we take a policy only till 50 or 45 or something like that. But then when there is a practical problem of continuing your employment till 55 or 60, then we left uncovered. So be idealistic, be practical, and you can set your, if you're very sure that this is where you are going to retire, take up to that value. That's the idea I'm trying to make. And that is going to the resolution as well. Taking termination, still retirement is ideal option, but one has to decide until what age he will require the cover. Coming to error 5, choose the correct payout option. Again, this is one small area, but where people will not have many ideas. The first, there are like three types of payout options. One is lump sum payout, where the entire money of 1 crore, 2 crore, or 3 crore comes to the family. There is a second option which is lump sum plus income, where first upon the demise, first 50% of the value, say your coverage is 2 crore, and the lump sum will be 50% of that, which is 1 crore will come to the family at the time of demise, and for the next 10 years, the another 1 crore will come as income for next 10 years as a monthly payout, right? Third option is only the income option, where you will be given monthly payout for the next 10 years. So that is only the income option. So again, there is no recommendation as such. So you should know or try to understand from your nominee what type would be required for them. Say if your nominee doesn't know how to handle the entire 2 crore value when received, then that can go for a toss. Second is if you're not sure if she only wants or he or she only wants a monthly income type of thing, then probably you can settle down with lump sum plus income, where 50% of the cover will come now and then 50% comes later. So that can be one of the good options. So you can understand from your nominee, or you will know, at least to some extent you will be able to assess what type of payout your family should receive upon the demise. And that is the resolution we are also saying. You can choose the appropriate payout option that will pay off your beneficiary as per their needs. Next is not covering Malwoman Property Act under life insurance. Again, to answer this question, we have a poll. So request all of you to answer that. Mr. Sudhir, I can see that you're not able to poll. That's fine. I'll take your answers from the chat and I'll try to answer that. And again, yeah, request all of you to answer this because this is very important and it will help us to assess properly. Okay, so 60% of you have said that you're not aware about what is Management Property Act, and 40%, again, I'm happy that 40% of the people are aware and avail that. So that's a great thing. And for the rest of 60, so for the rest of 60, I'll answer that. So what is Management Property Act? Uh, so this is applicable for people who have taken any business loans. If you're a business people, business person or self-employed, and for people who have taken home loan or any form of loan from bank or from individual person, or if you're a person who have put guarantor signature for somebody's loan, these Management Property Act is very much applicable to you because this is protecting your spouse uh, for the claim amount that she is going to receive. For example, if this Management Property Act is not, let's take a scenario where this Management Property Act is not taken under life insurance, right? So let's say a person has taken 2 crore term insurance and he has a home loan of 1 lakh, 1 crore, sorry, 1 crore home loan and then 2 crore term insurance. So the scenario is that upon his demise, his 1 crore from the claim amount will go to the bank and then only 1 crore will come to the family. And that 1 crore might not be enough, right? This is one case. There is also a second case where a person has taken only 50 lakhs or 1 crore term insurance, but his home loan itself is 1 crore. So whatever is coming from the life insurance policy, that will go to the bank, and your wife or your spouse will not get anything from your claim amount, which is a very, very big risk. So, I would suggest, anybody who has taken any sort of loan, be it a business loan or personal loan or home loan, any sort of loan, while taking a term insurance next time, please cover yourself in a Married Women Property Act. And for somebody who has not taken a Married Women Property Act under the life insurance in the existing policy, next time when you take a term insurance, because obviously you will require term insurance later. For example, you've taken let's say you've taken a term insurance last year, and your salary and your responsibility towards the family increases. Within 2 years you can take, probably next year or sometime you can take another term insurance, and definitely put this Married Women Property Act. You can sign up for this. So the main idea, the main advantage is that you will not pay anything extra for this, but then you're making sure that when you take up the policy under this act, the entire amount goes to the family only, or your wife or children only, and not to anybody else. And anybody else here, I mean that your creditors, your bank, people, or even your relatives, nobody will have any say. Nobody will have any power or any authority towards that amount, and only your wife and children will decide what to give and how to give and when to give. So this amount will be in the control of your spouse. So that's what is very important when you take a life insurance under a Married Women Property Act. And again, even for somebody, if you've been wondering, should I take only this Married Women Property only when I have a loan? Not required. You can take a Married Women Property Act even if you don't have loans, because this is going to cover or protect you for the future loans that you're going to take as well, right? So that's very important. I hope I was clear about this point. Hiding or making incorrect disclosures or declarations. So most of us will be very much aware that what to discuss and when, how to discuss, disclose things when we take a policy, be it a health or term insurance, right? And these disclosures can be your medical, history. Say you have taken some surgery, or you've been taking some tablet, even though it's a very meager or very it can be for a very silly reason, not silly reason, for a little reason. But then you'll be taking a tablet because you've been feeling giddiness or something like that. But it is better to disclose that to a health insurance or a life insurance person, because that will definitely create an impact when there is a claim, right? So and there are many cases where even after disclosing, you will get a standard and a perfect policy. So not every time your term insurance or a health insurance premium increases. Only if it is very very much not under the risk where the insurance people faces, then that's when they increase your premium or decides not to provide you coverage. But then most of the cases it's only for a little reason, that we take a medication, or taking a surgery, or even personal habits like smoking or taking alcohol. So it's better to disclose, because the entire point of taking an insurance is to make sure the amount receives when the family or the person requires, right? So because of not disclosing properly, what if you don't get the claim at all? So the whole point of taking insurance itself is goes void, right? So it's better we hide every. I mean, we don't hide everything, and it's better we disclose everything. There is also one more point. What if I get some illness after taking the policy? You don't have to disclose that, because it's only after taking the policy. But it's better to keep the insurance company informed. So because anyway they will cover, that's for sure. But it is also making sure that you're a very honest person, and you are disclosing everything that is coming your way, and the claim will be making sure that the claim is paid when there is really a requirement. So proper and appropriate disclosures regarding health policy and personal habits have to be made before taking any policy. Incorrect disclosure can lead to claim rejection. That's very true. So disclose whatever you know. If you don't know something, then that's not a problem because it's not something that's very intentional. So it's fine. Error 8, not reviewing the exclusions and limitations. So this is also very much important because you need to know what is not covered in your policy and what are the limitations in your policy. Because most of us would have taken, or your parents would have taken a policy from any public limited company, where there is a room and capping. Say for example, my father had a policy from a company for a 3 lakh value. This is like 3 4 years back, I'm saying. And there is this 1 point room rent capping. It's only 1% of the sum assured. So the policy value that my father had is 3 lakh, which covers all of us, all the family members, and it's only 3 lakh. So when the problem in that, the practical problem is that when I go get admitted, right, the insurance company or the hospital will say that I only can claim up to 3,000 per day, including the room rent, right? So this is a big problem because if we are able to get within that scope, then that's fine. But then if you go to a normal standard hospital, the room rent is not less than 5,000 per day, right? So you will end up paying a big margin when you get out of the hospital or when you get discharged from the hospital. So these are the small leakages where we don't really pay attention to. But this is very important because even after paying the premium, many of us end up paying for the claim as well, because claim is something that is supposed to be paid by the insurer, not by us. So that should be very clear. There are certain things where we will also pay, which is 1% or 2%. That's fine. But then paying for 10%, 20%, or 30%, or even 50% is not agreeable, and that will not do justice to your personal finance, and that will not do justice to your view of taking a health insurance or a term insurance. Next is not reviewing the exclusions. So you need to know what is the waiting period, how long you have to wait, and what are the illnesses that is uh, not covered for 2 years or 3 years or 1 year. So depending on that, you can plan your health insurance depending on that, because you might have a medical history, but then if the policy is not going to cover that for 3 years and you're not aware about it, and that's when you feel cheated, or you feel uh, you're not taking the right insurance policy in the first place. So the solution is a policyholder should go through and be aware of all the exclusions and limitations. Leaving even a small gap can turn big expensive or very expensive tomorrow. So review everything. Take some time, review everything. Ask your insurance agent or anybody whom you think is helping out in the insurance. Ask everything, every question until you're convinced. Don't compromise on that value. Next question is, error is compromising on coverage for lower premium. Again, for this, we have a poll. I would want you to answer. Uh, okay. Thanks for the answers. Again, I have some interesting answers. So most of you, that is 60% of you, have said it's too risky to compromise on your coverage because of the premium. 31% have said it's subjective, which is also agreeable to some extent. And only, I think, very less percentage, which is 8% of the people only, have said it's practical. Yes, it's practical. So I would like to answer all three of you. So first is no, it's too risky. Agreed. So you cannot compromise on your coverage because that is the coverage you would be requiring or your family would be requiring. So because of deciding your premium first and then taking coverage is not a good option. Second is it's very subjective. I agree this to some extent because uh, what is that that I want from a policy is also that matters. So I agree to an extent that it's very subjective, but I would say that you can also considering not compromising on your coverage like all the times. I know you would not compromise every time, but there is a situation, then it's fine only. But taking coverage is very important, and you can keep upgrading it later. So for the third option where you say it's practical, yes, I would like to compromise on your coverage because it's practical. That is also okay, but again, the suggestion is uh, the main point is that you've taken insurance, so I'm happy about that. But then keep upgrading it as and when you feel it's necessary to do, because end of the day, it's not something that you want; it is something that you need. So that is the difference we need to understand. And thanks for answering this. And as many of you have said, agreed, every insurance should cover all members in the family and should be for a decent value, considering medical history and future expenses. So considering these values, we need to have the coverage. Say there is only one person in the family, you can take for a 5 lakh or 1.5 lakh and keep upgrading it. But having a 5 lakh coverage for like 4 people or 5 people in the policy, especially having senior citizen also in the policy, is not very practical doable also. So that's one thing we need to have check every time. Error 10 is taking a top up with lower deductible. So again, we have a poll. This is the last poll that I'm be taking. So I would want all of your answers, please. So most of you have said you're not familiar with what a top up or what a deductible is supposed to be, and there is an equal contribution for yes, I'm well informed, and then I have basic understanding. So I'll address the first part first, which is no, I'm not familiar with it. So a top up insurance is something that you take additionally to top or to assist your base policy. So that's a top up policy. And what a deductible is that? Deductible is your basic policy value. Okay, it can be 3 lakhs or 5 lakhs or even 10 lakhs or even 20 lakhs as well. So basically, you're saying that the insurance company that first I used my 3 lakhs or 5 lakhs for the basic hospitalization, but if it goes beyond a point, then I would like to use this top up policy. That's how it is done. So first you will only use the base policy, and only if it ends, you will use the top up policy, right? But why this question we have put is that what do we mean by low deductible is that when we have a family of 4 people or 5 people, having a lower deductible doesn't make sense because Deductible means that is my base policy value. So base policy value should be for at least 10 lakhs or 15 lakhs, because you're putting a strong foundation. You're saying your insurance, you're saying that you want good features, a good policy with good features, and you don't want to compromise. So in this case, it your deductible cannot be lower, or you should not be lower. It should be at least for 10 lakhs or 15 lakhs. If you have just started, then 5 lakhs is fine, but then you have to keep increasing it and again take a top up later. So low deductible means that again you're compromising on your health insurance is what it means. So I hope I was clear, and that is the same legislation that we are saying. The deductible should be for a decent value of at least 10 lakh or 15 lakhs. Just to put it in easy words, my base policy should be for a stronger value, 10 lakhs or 15 lakhs, and it should be also dependent on how many members I'm covering. And only then you have to take a top up policy. That is additional policy, not upfront itself. So that's the point I'm trying to make, and I hope I made sense here. So 6 common mistakes made after taking a policy. So all this while we saw what are the mistakes or errors that we tend to make before taking the policy. But there are 6 common mistakes that is done after taking the policy. And my colleague Archana will be taking up this, or she will be covering these errors now. Over Archana, you can take it up.
Thank you, Swagat. So, moving on to 6 common mistakes made after taking an insurance policy. So, the first one is failing to update beneficiary or nominee. So, we have a poll here, and I would request you people to attend the poll. Okay. So nearly 70% of the attendees have given that they have provided a detailed information. That's very good to know. And nearly 30 per like one people have noted that they don't have any nominee, and 26% of the population said that no, they haven't discussed it in detail. Okay, so you will need to identify a nominee or nominees for each policy, right, before you buy. And after you buy the policy, you take them to the claim settlement process, so they are very well informed. Because as per section 39 of the Insurance Laws Amendment Act 2015, so the nominees could be your spouse, or they could be your parents or even children. They are the ultimate beneficiaries of the insurance claim money. So this why we are keeping a nominee in place is that this ensures that the money goes to a specific recipient as per your choice. So in addition to appointing nominee, it is recommended that you also create a will to account for the following scenarios. See, for example, if you want to nominate someone other than parent, child, or spouse. So in the unfortunate case, that even if the all your nominees passes away, the payment would be made as per the will. So, and in this scenario, you have a life insurance policy which is meant to provide for the financial security to your family, right? So here, even when we diligently pay your premium over the years, believing you have done your part to protect your loved ones, But if at all you have never sat down with your nominee, and to discuss the details of the insurance policy, they don't know where the policy documents are kept, or they are unaware of the coverage amount, and they have no idea how to file a claim in case of the unexpected occurs, right? So when the policyholder is no longer around, let's consider this situation, and the family, they are entitled to an insurance payout, but they don't know how to access it. So as a result, they struggle to cover immediate expenses like outstanding debt or even daily living expenses. So this lack of communication and education about your insurance policy can lead to severe consequences, right? So this is the situation that no one wants their family to experience even when they take an insurance policy. So it's always best to update the beneficiary about the policy, about the coverage, how to claim, in case of, if something happens and people going for a claim, how to go for the claim process and all that, the process of the claim. So this all we should sit and update the beneficiary or the nominee. So this is the first thing we want to do right after taking a policy. So, and the error two is non-disclosure of changes in health status. So here, actually, there is no requirement as per the conditions of any policy that requires you to inform the insurer about any such change after you bought the policy. However, to make sure that there is no hassle, you can update your insurer about the same. But just need you can be sure that it is not mandatory to disclose this information after taking the policy, because it's already covered in the policy. However, before taking the policy or while in the process of taking the policy, you should definitely disclose any change in your health status. And the third error is that unaware of network hospitals. So before this, I would like you people to take a poll. Okay, so the poll says that most of our attendees are aware of the network hospitals. Yeah. Yeah, that's a very good thing. So just imagine you suddenly require a medical attention. Okay. So you rush to the nearest hospital, assuming your health insurance will cover all the expenses. However, you don't know that that hospital is not part of your insurance provider's network. So now, even having health insurance in place, you might face two challenges. The one is higher expense. Since the hospital is not in the network, no, your insurance provider may not have negotiated discounted rates, and as a result you could end up paying higher medical bills that will need to pay out of your pocket. So higher expenses could be one of the problem. The second thing is reimbursement hassle, and here comes a very important problem. Even if your policy allows reimbursement, you are now going to pay out of your pocket the full amount upfront and then go through the longer lengthy reimbursement process with your insurance company. So this could be financially stressful and time consuming also. So in contrast, if you are aware of the network hospitals covered by your health insurance, So you could have chosen one of those facilities, right? So making the entire process smoother for both of you and the healthcare provider. So I have some interesting stats here. Even in India, usually network hospitals often provide higher discounted rates to insurance providers. So policyholders availing services at network hospitals may usually experience cost saving up to 30% on a medical expenses when compared to non-network hospitals. And the second point is even in client settlement ratio, when you see the numbers, it is common for insurers, right? They boast their claim settlement ratio, and 90% of it comes from network hospital claims, since it's a very smooth, process. And the third one is, network hospitals help these policy holders to manage these costs more effectively. So that is the thing we need to look at in case of network hospitals. So the resolution here is, at a network hospital, you can make a cashless claim, eliminating concerns and about upfront payment for most treatment expenses. So definitely you need to update yourself about the network hospitals. You can get the list of hospitals from the company's website itself. So you can just Google search it, or you can go through the policy document also to find out the list of network hospitals. And the fourth error is not providing entire bills for full claim. So let's assume you are going for a reimbursement case. So what is a common hiccup there? So that is when you miss the bills, right? So it is a situation that can cause frustration, delays, and uncertainty. So what can we do to navigate through this? So in the event some bills are missing, no, from your medical expense, it can hinder the smooth reimbursement process. So insurance company typically require a comprehensive set of documents, including bills, prescriptions, diagnostic reports to process claims efficient. So if at all, let's assume that you are going for a medical procedure and submit your reimbursement claim. But due to various reasons, like maybe a misplacement of your bill or oversight, some bills go missing. So now you are in a situation wherein your claim might be put on hold or even get denied. So that's where, to avoid this scenario, it's very crucial to keep a meticulous record of all your medical expenses, bills, and receipts. So you can either take a digital backup, or you can even have in a physical file, whichever is okay for you for the easy retrieval whenever it is needed. So basically, record keeping and timely communication, these two will help you to get claim effectively in case of reimbursement process. And also, it is very important to communicate your insurers on time, right? So even if the claim, or else the hospitalization occurred 1 month back, and you are getting all the bills, and you are going and filing for a claim after 2 or 3 months, that's not gonna help, right? So it's both that you submit your all your bills, keep all your bills handy, and at the same time, timely communication. This too helps you get the claim easily. So here the resolution is, when the claim is a reimbursement, we should make sure that the entire bill should be gathered and provided for the fulfillment of claim. So missing one bill can result in partial approval or entire rejection of the claim. So the fifth error, and mostly we oversee this error, right? Like, that is the late premium payment. So what is going to happen because of that? Your insurance policy, we know that is a contract, and timely premium payment are a fundamental part of maintaining the coverage. Because when you pay premium late, no, it can set off chain of events that may impact your policy. So let's assume, for example, you missed the deadline for your premium payment. Initially, you think it's just a minor delay, right? You can pay it, another 10 or 15 days, when anyways, you have pre-lookup period, grace period, wherein you can make the payment. But this oversight can lead to a lapse in the coverage. This means, when during this period, when the premium is unpaid, you are not protected by your insurance. So what are the consequences we face here? The first one is lapse in coverage. See, this is the most immediate consequence. That is, if an unfortunate event occurs, your policy may not provide the protection. during this period. And there is another thing called, even the policy get lapsed. Again, if you reinstate a lapsed policy, it will be very challenging because it involves additional paperwork, medical examination. In some case, there can be increased premium also. And the third one is loss of benefits. So some policies have grace periods, but even during this particular period, the policy holder may not be entitled to certain benefits, maybe critical illness benefit or disability available during the lapse. So we need to ensure, to avoid this mistake, we can set up an automatic payment or reminders to ensure the premium is paid on time. And keeping track of due dates is very crucial for maintaining continuous coverages and enjoying the full benefits of your policy. So we should know that in the world of insurance, timing is everything. And a late premium payment might seem like a small mistake, but it can have a lasting consequences. So we need to make sure, and the resolution for this mistake will be policy may lapse, and taking a new policy altogether will be a hectic task. And we should consider this, and we should pay on time. So, and the final mistake that I'm going to discuss here is not updating the value of coverage every once in a while. So this is the final slide, and we have a final poll here, and I want you people to answer this. Hope the poll is visible now. You can vote for the same. Okay, 38% of the attendees said once in a 5 year, and 13% said only when there is significant life event. Okay. I'll wait for one more minute. Okay, nearly 50% said once in 5 years. And an equal split for annually, once when there is a significant life event. And 17% said I have never updated my coverage value. Yes. So not updating it, your coverage value periodically might seem like a minor oversight, but it can lead to a substantial consequences. So let's just uncover, why keeping your coverage value current is more important than you might think. So we know that insurance is designed to adapt to your changing life circumstances. So it's not constant; it's gonna change while your life, your life is changing along the way. So failing to update your coverage value means your policy might not accurately reflect your current needs and financial situation. So let's consider a scenario when you purchased a life insurance policy, like let's say 3 to 4 years ago. And since then, let's assume that you have gotten married, had children, maybe even purchased a home. Now, stick to the same old insurance policy. If the coverage value doesn't reflect these changes, your loved ones might not be adequately protected in the event of any circumstances. So, what are all the consequences that can come because of not updating the coverage? The first one is underinsurance. So, this is the most immediate consequence, that is life changes. So, we saw that nearly sorry, 15% of them said only when there is significant life event, they'll consider updating their coverage. That's a very good option because, you know, the most immediate consequence, as I said, like you will be undercover. Life changes such as marriage, birth of child, home ownership, these all need to be included, and an adjustment in coverage should be there to ensure your financial well-being. And the second thing is inadequate financial protection. So let's assume that you just have a 5 crore, 1 crore term insurance for all your life, and that is not at all going to change according your financial upstand. So in that case, it might not be enough to cover your outstanding debts, mortgage, or provide sufficient financial support to your dependents. So this could leave your loved ones facing financial hardships if something that happened to you. So missed opportunities. Failing to update your coverage may result in missed opportunities to take advantage of new features or enhancement that could better suit your current needs. So what we can do to avoid this mistake is cover should be updated in par with medical inflation. You should make sure of that. And adding or removing new members can also be the part of it. And also, once personal medical history, they can go for updating their coverage value once in a while. And above all, as majority of the attendees said that they'll do it once in a 5 years. That is also a very good option. You can set a regular schedule to review your insurance coverage, and especially after significant life events, right? So you can communicate with your insurance advisor or provider to discuss any changes and ensure your policy aligns with your current situation. So this is where we always tell our clients to go for checking their HLB every once in 5 years so that they get a coverage that meets their current circumstances, that meets their current situation. So that needs to be done. So you should understand that to close with it. So you should understand that your insurance policy should grow and evolve with you. So don't let the coverage value be stagnant. Regularly update it. Ensure that your loved ones are adequately protected and your policy continues to meet your ever changing needs. Thank you. Now up to Q&A session. So we can post your questions on the chat box.
I see a question from Mr. Ravi. How to choose the policy value for two adults and one teenage boy? So it depends on your medical history, and it depends on whether you have employer provided coverage. But generally, on an average, we say you're somewhere between uh, 35 to 40 or even more than that. Then I would say for two adults and one teenage boy, we would suggest at least 15 lakhs. But it's very subjective also. It also depends on your employer product coverage or what other insurance you have. But this is the average value suggest. So uh, that's one thing. Anyway, so what we'll do is we'll put our number and email ID in this chat. You can also, get in touch with us if you further have any questions in this, regard. Second is, what is the difference between medical policy and a health policy? So health policy will have some premium features or like some extra benefits which are really useful. For example, like no claim bonus, ambulance benefit, restoration benefit, annual health checkup, and even some more alternate treatments, something like that. Whereas Mediclaim policies do not have these things. Like they are pretty much very compromised. So Mediclaim policies are, not really a health insurance, but they are substandard health insurance, you can say, where most of the it covers basic hospitalization and only that's it. Next is from Mr. Karthik. I already taken term insurance of 1 crore few years before. I want to increase this. Can I take another term insurance of 1 crore? or is it possible to increase the coverage on existing policy? Also, if I take another policy, is it it will cost more as my age increased? Okay, you can increase your existing term insurance if you have gone through like 2 to 3 events. First event is say you've taken the term insurance first 1 crore while you are bachelor and now you're married, showing that reason you can increase your coverage up to 50 lakh. That's one thing. Second is, say if you have one children or one child or two children, depending on that you can add another 25 lakhs or probably 50 lakhs to it. That's one way of increasing it, which is called life stage events. But taking other term insurance would make sense because anyway the premiums, okay, as I said, will be dependent on your existing age only, but there'll not be major difference as such. There it will be like say 30% or 40% increase, but I think that should be within line of your affordability if I'm not wrong. So it's better to take another 1 crore itself, and it doesn't matter if you have multiple insurances. Anyway, you will disclose about your first insurance as well, so it's fine only. From Mr. Kumaran, can I take online insurance for medical? Uh, So for this question, online insurance. Okay, with regards to health insurance, I yeah, you can take online insurance. Aqua insurance is, yeah, you can take, but then be aware of what they are covering. Be aware of how it will be beneficial to you. Be aware of your existing medical history and your treatment, and be aware of what they cover, what they don't cover, what are the limitations and everything, and also be aware of how you want to claim if there is going to be a claim, like how you want to approach the insurance company, how is it feasible, all that you need to be aware, because since you're going to do everything here, you have to be aware. You have to keep the checklist of, you have to foresee what are the problems that you're going to get. You have to have the checklist. You have to see if they are ticked off, and only then you can go with that policy. And yeah, compare it with many policies, and or if you know somebody, then take their advice as well. But you'll have to make sure all these points are ticked off, and only then you can approach that because it will be beneficial only then. Next is from Mr. Shanmugavel. In early age, how much sum assured term insurance amount is better? So it depends on your cumulative value, as we told earlier, because you need to calculate your annual income. You need to calculate annual expense that you're making for the family or your family would require, and you need to you need to understand what is going to be your retirement age. You need to account your assets. You need to account your liabilities, all these, and more importantly you need to account your your beneficiaries life expectancy age, say 80 or 85, and all these factors are very important, and that's how a human value, or that's how up to that value only you can take a term insurance. So that's very important. So there is no criteria as such as, say I'm 25, I need to take 1 crore, 30 I need to take 2 crore. Not like that. It entirely depends on your financial status. It entirely depends on your family dependence. But say if somebody doesn't have dependence at all, or financial dependence, say I'm a bachelor and I'm earning, but then my parents are sorted, they have their pensions coming and all that, then I don't really contribute to my family expenses. So I don't need to take a term insurance. That's the point. Although I'm earning, I don't need to take a term insurance if I don't have financial dependence. So it literally depends on your financial dependence and how much they are dependent on you financially. That's very important. Next from Mr. Damodaran, if I increase the value in health insurance, the bonus provided in past for no claim also will be added to the increased value or not? Yes, sir. Only for that year it will be increased added, but then from the subsequent year or from the next year, whatever is the original sum insured, it will be on that only. Say for example, from 5 lakh, you increase it to 7.5. Only for that year, this bonus can be accounted. From the next year, the bonus will be calculated on 7.5 only. In both ways, it's beneficial only, sir. So it shouldn't be a concern. If both me and my wife working means term insurance can be taken as split or for any high earning want to go. So if you are dependent on your wife for any financial reasons, and if she is also dependent on you for any financial reasons, then both of you have to take. So the amount varies because let's take a case where you're building a house, and you've decided that you will provide for the family and she will take the loan on her name. right? So in both cases are very important because you are providing for the family and she is taking care of the house, home loan, right? So both of you are, one way depend on each other. So both of you have to take, your both of you have to calculate your human value, and both of you have to take the term insurance. That's very important because only one taking term insurance, might not work out very well. Might not work out the best way, because end of the day, if there is any unfortunate event happens to one of you, then the other will 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 get in the stage of compromising, or will get in the stage of risk. Next is from Mr. Suresh Doreswamy. Is it possible to move the company insurance to personal insurance just in case if I'm leaving company? You need to check with your HR if that can be doable, because you know there are options available. But the problem is, yeah, you can do that. That's first thing. But check with your HR once. Second is, if at all you're moving to your personal insurance, if you're converting, then the waiting period will be applicable, and it will be treated as a personal insurance as such, and all the waiting period will be applicable, although you've been continuing with your employer the same policy. So have all those checklists ready, check all these points, and if you feel that it's very fruitful to you, then go ahead with that. From Mr. Kumaran, I took my policy in May 23 for 1 crore policy at ACO. Unfortunately, hospitalized in June. Claim was around 7 lakhs. They made full payment. Okay. What are the accepted at policy? They honored. Single rupee not deducted. Just for info, I'm sharing here. Thanks. Okay, sir. Great. If that is fruitful to you, then we are happy about it. Just that, as I told, you need to have the checklist, and if all the checklists are ticked off, then yes, it's working for you really well. So you can post your questions if you have anything, or yeah, you know, and I hope I was able to answer your questions in the right sense. So we've also put our number in the chat, and if you feel like you want your portfolio of insurance to be reviewed, we'll also share our mail ID here, or you can get in touch with us. That's a WhatsApp number as well. That's a centralized insurance number that we have. You can get in touch. That's a WhatsApp number. You can text us on WhatsApp, and we'll reach out to you. If not, we'll provide our email ID as well, where you can get in touch. Any which way works for us, and we'll review and tell whether you're on the right track, or there is something that you need to correct, and we'll be able to assess and tell that to you. That's one thing. And so in the chat, we've also put our YouTube videos in the Milestones to Wealth channel, Tamil channel. So we've done a series of videos on term insurance. I would request all of you to visit that, see that, and if at all you have any questions for that, you can probably comment in those appropriate respective videos. And that's one thing. Secondly, we'll be doing a series of videos again in the health insurance space, and we'll be debunking uh, topic by topic, benefit by benefit, feature by feature, in the health insurance that we expect a policy to have. And I think that will also be fruitful to you, I guess. So, and if at all you feel should we do any topic, for video or for webinar, you can tell us. We'll be happy to address that as well. And we'll be happy to explore those options as well. And I think we've come to closure. If you guys don't have any questions to ask, we've come to a closure. So let us know if you have any questions, or I think we can, end the meeting as well. Thank you. Thank you so much. Thanks for attending. And you can, if at all you've reached out to us in this webinar through any RM, you can give the feedback there as also. That will also be very helpful, and you can leave your feedbacks here as well. And if you feel if there are any areas that we can improve, please put that also. We are open to those insights and those feedbacks as well. We'll definitely we'll develop those insights. Thank you, Mr. Kumaran. Thank you, Mr. Arun. Thank you, Mr. Suresh. Thank you, Mr. Ramaran. And thank you, Mr. Sudhir. Thank you, Mr. Venkatesh, as well. I hope it was very fruitful to you. Thank you. And anyway, this webinar will be available tomorrow or by Monday, in our M2W channel. For any queries or anything, or if at all you want to revisit the thank you for the appreciation. And if at all you want to revisit any of the points that we discussed, you can go there. So there's a question from Mr. Kumar in Q&A session. Okay, which insurance company provides better service with low premium for 2 adults and 2 teens? So better service is again a very subjective question, sir. But then for low premium, okay. What we would suggest is low premium is not a criteria that you have to see if I'm not wrong. But if you go for a good policy, and again service, or it really depends on how well they are to perform now and how well they are going to perform in the future. But and I can't really name the company also here. But anyway, we have put our number in the chat. You can probably call us or you can reach out to us. We'll be happy to answer that question there. And all we would tell you is that you declare or you disclose whatever details that you want to disclose. And I'm very sure in that sense that no insurance company can reject or provide any substandard service in that area. So be fully aware, be fully disclose everything. And again, I'm sure there'll not be any substandard service from the insurance company. And if at all there is, we'll be there to support you. So definitely, yeah. But you really want to know the company, I think you have to, reach out to us. That will be better. Thank you. Thank you, Mr. Samuel. Thank you. Thank you.